Hey everyone, George here. So today we continue our strategies with respect to crypto. Again, I make these episodes because I do have a good amount of contractor clients who hold their liquidity reserves in cryptos as opposed to just straight cash, which I think is a smart thing to do, with precautions and limitations. We talked about tax gain harvesting, tax loss harvesting, as well as gifting cryptos. And today we're going to go over 3 more strategies. So let's get started. So number 4 strategy, which is my personal favorite, is using a self-directed IRA or 401k to make your crypto purchases. So as opposed to making your crypto purchases through a regular brokerage account, you're doing this now through an actual retirement plan, qualified retirement plan account. And there's many platforms out there now. There's, I Trust Capital, Coin IRA. There's if you Google it, a ton of them will come up. My personal favorite is I Trust Capital. So you could either have a traditional IRA, which in 2025 you can contribute $7,000 to it and get a deduction, and $8,000 if you're over 50. You can have a SEP IRA, which you can contribute up to $70,000, but there are certain limitations based on self-employment earnings. You can do a Roth IRA, which doesn't get you a deduction now, but any gains grow tax-free. Or you can do a 401k, and the limits for that are $70,000 or $81,000 depending on your age. But the idea here is that any money that you're using to buy crypto, instead of putting it in the regular brokerage account where you get no deduction for it, effectively, other than the Roth IRA, all other plan types, you're putting the money into the plan, purchasing your crypto, and for everything that you put into the plan, you get a straight tax deduction for it. Every trade that you make, effectively, you're making trades, purchases, sales, everything completely tax-free in the plan, as long as you're not taking out the money. This is great in that it's very tax efficient, and that you get a deduction, you make all your trades tax-free. However, the only thing I would caution you is you want to stick to the contribution limits, based on whatever you get a deduction for. And you don't want to over-contribute because, number 1, you don't get a deduction. And number 2, it becomes, you don't have the advantage of being able to cash out in the event of you needing that liquidity. You could take out possibly a loan against IRA. However, it's not as liquid as a regular brokerage account. So you definitely want to make these contributions every year so you get the deduction and do all your trading in there tax-free. However, you don't want to over-contribute or put all your liquidity into the plan, because some of these plans can take up to 2 to 3 weeks to get your money out, and not to mention penalties that you'd need to pay on top of the income taxes for the distributions that you make. So this is great for if you're trading to put money away, get the deduction, trade tax free. However, do it with your limits, as in enough to get the tax deductions and keep enough liquidity on hand for your projects, payroll, anything that may come up. Number 5 strategy is donating crypto to charity. So if you're into donating, you have a specific cause, something that you're all for, this is a very tax efficient move in that you avoid the capital gains tax entirely, and you get a deduction for the fair value of what you donate, assuming you held the positions for at least 1 year. So for example, if you bought Bitcoin for $20,000 and those positions are now worth $110,000, you can donate that $110,000, get a $110,000 deduction, and that $90,000 of gains you pay no tax on whatsoever. So important things to note on this is that you need to donate it to an actual 501c3 organization. You need to be itemizing your deductions on your personal return. Any deductions are limited to 30% of AGI, and any donations over $5,000 actually would require a qualified appraisal, since this is treated as property. Now, the number 6 tax strategy with respect to cryptos, and this is a big one. It would potentially allow you to offset your capital losses against ordinary income. However, this is very complicated, and I recommend approaching it with utmost caution and even consulting with a professional before doing this. And this is the 475F election, which entails mark-to-market accounting, and it would allow you to offset losses, even unrealized losses, even against ordinary income. Now, to qualify for 475F, you first need to actually have qualify for trader status. And to do that, you need to show substantial trading activity, which is 500 plus trades per year and 4 to 5 days of the week of each week that you trade. You need regular, continuous, and ongoing trading, which is that trading must occur on most trading days. Sporadic bursts won't qualify, and having weeks or months of gaps would definitely kill trader status. You have to show intent to profit from short-term market movements. Here they want you to show that you're profiting from daily or weekly trade movements. Also, holding periods here would be short, under 31 days. Too many long-term holds would disqualify you. So you have to show these 3 things just to qualify for trader status as opposed to investor status, just to be able to make the 475F election. So this is a high bar. Most people, especially construction contractors, would not qualify for this, to be honest. But if you are able to show this fact pattern, potentially you could qualify for 475F and take losses, your crypto losses against ordinary income. So you'd break out of that $3,000 loss limitation that you get to offset capital losses against ordinary income. So typically, what would this look like? And I'm going to put this down here and we can go over it. So usually if somebody qualifies successfully for trader status, they have daily or near daily trading logs. They have a high number of trades per month. They're trading as their primary income generating activity. Consistent year-round activity, significant time devoted, 4+ hours per day, few or no long-term investments mixed in, and separate business setup. And yeah, definitely in this case, I would set up a separate LLC or just entirely separate entity and have that do the trading activity. If you want to set up your AI to go ahead and make your trades all day long while you're on site doing your construction project, that might really help. But definitely having a separate entity will be very beneficial in this case. Schedule C, especially if you're making significant profits, is going to increase your audit risk significantly. To put it in comparison, somebody with a Schedule C, on their tax return is at a 3% audit risk versus if you don't have a Schedule C, or 1% audit risk. So automatically with a Schedule C, especially with significant income, your audit risk is already tripled. Now, if somehow you do pass all those hurdles and you want to make you're a trader status and you do want to make a 475F election, you have to make it by April 15 of the year in which you want it to take effect. If it's going to be, say, on a Schedule C, and if it's for an S Corp, LLC, some other pass-through entity, it's 75 days from the beginning of that tax year. So for example, if it was on your Schedule C or single member LLC or something, you have to actually make the election for 2025 tax year. It would have had to be made by April 15 of 2025. So you can't at the end of the year or in the tax season of the following year decide that you want to make it retroactively. The IRS doesn't allow retroactive elections in this case. So again, the benefit of this is that you're able to offset your crypto losses against ordinary income. You're not barred at the $3,000 cap of capital losses being offset to income. However, this is a very high bar to cross, and it does introduce other complications like mark-to-market accounting. So definitely either reach out to us, reach out to a CPA or somebody who's proficient in this area. If you did want to make this election, this is kind of heavy artillery. So I wouldn't recommend it for just anybody, but it does exist and it is out there. In any case, I hope you found this helpful. Click like, subscribe, turn on notifications for any updates, and hope to see you in the next one.